What is going on, SoFi fans? Welcome back to Financial Journey. So today I want to give you a good overview of what is happening behind the scenes, especially as well. There's been a lot of big abnormal transactions that I do want to share with you, but fundamentally, SoFi is moving in the right direction to be a very profitable company. So I want to share my thoughts on that. Before I get into any of that though, make sure you guys hit that thumbs up and subscribe. Always greatly appreciated. And with that, let's get right to it. So this already did come out, but I just wanted to share this with you because I'm still very much impressed with Anthony, and he has been buying the hell out of SoFi. So he goes to show that this is at a massive discount, and he does believe in the company. He also did use his own money, and you can tell that based on transaction code P. So a lot of big money. So one transaction, which was on the 8th, $682,000, $132,000, and $318,000. So overall, that's a very good indication of what a good CEO is. Over and above that though, he recently did take advantage of these discounted prices even further, and on the 14th he did convert some restricted stock to common shares. So once again, that is a very good deal. He did get roughly about 94,000 shares. Some were taken off for taxes, but once again, this is exactly what you want to look for in a CEO. As I've said over the last couple of videos though, SoFi needs to really transition away from obtaining customers to revenue. Plain and simple, we are in the environment where banks make a ton of money, so SoFi needs to really transition and capitalize on that. One thing that they are doing to very much do that is this. So they are still raising APY. So savings have gone to 3.5% APY and checking is 2.5. Once again, they were really increasing the checking, and I think that really cut into SoFi's revenue. But what they've recently started to do is have this deviation where savings goes up and checking maintains itself. And I think stats are on our side. Vaguely just Googling and just based on personal experience as well, roughly about 20 to 30% of individuals only have a savings account. Majority of people just use their own checking account or potentially just investments as savings. So once again, I think the fact that they are doing this is a very good way to entice customers to come over, because people will see that 3.5% APY, jump all over that and come over, yet they might not even have a savings account. So once again, I think that's a very good marketing aspect for SoFi to entice customers to come over and still yet capitalize on that revenue that they could make, because like I said, they are maintaining that 2.5% APY, and that's on checking accounts. So right now, interest rates are roughly about 4.5%. Give or take, I think they did refer in Q3, their deviation was only roughly about 0.6, so 60 basis points. So right now, we are in for a very good couple quarters ahead of us that we're going to see a huge bump up in revenue. Maybe even enough so that a lot of analysts will forget about the student debt being extended and things like that. But I don't want to talk about that in this video because right now, like I said, fundamentally, this is exactly what I wanted to see, and this is what I've been bringing up over the last several videos as well, that SoFi really needs to do this to kind of escalate their profitability, if you want to consider it that way. So let me know your thoughts on that. When it comes down to buy now, pay later, they really did incorporate that as well in a very positive way. So once again, I think this is a very good way to bring customers over, and definitely brings up the satisfaction of customers. Kind of has that all-in-one component feel as well to it. So again, I think SoFi is really doing the right moves in the right directions, and a lot of people might not necessarily like this because it does bring up a little bit of level of risk, but based on the level of risk that is involved in this, it's very, very small, because it does look like they are only doing between $50 and $500 in transactions, the overall total transaction. So that is very, very small in the grand scheme of things. So of course, they could always increase it, but once again, I think this is a very good starting point for SoFi, and just to kind of entice customers to come over in this aspect as well. So let me know your thoughts on that in the comments below. Like I said, I want to give you a good overview of everything, including what shorts are doing, what is happening on the secondary market, and also the dark pool. So as you can see, these are the transactions from the dark pool. I like to bring these up because it goes to show what institutions are generally doing behind the scenes. Of course, what they might be doing on the dark pool could mean several different things. It could be for the most part, for shorts as well. And shorts have really taken advantage of a lot of the fear that's been out there with just the broader market. So short score is currently 71. Higher the number, the higher the likelihood of a squeeze happening. Utilization is 96.68. So it did break off that 100%. So just be aware of that. And on Friday, they did increase 679,000 shares, bringing the grand total to 101.56 million shares being shorted. So relatively high, works out to be 13% give or take, so 12.91% of the free float. So I think generally speaking, fundamentally, things are starting to really heat up in the overall economy, and SoFi for the most part is holding its very good support, and that's more so as well on the technical front. Shorts know this, and they're very cautious about entering in. Keep in mind, roughly about 4 months ago, short interest on SoFi was almost 25%. So I think shorts know that SoFi very much so is going to flourish in a higher interest rate environment, and it's not worth their while to increase it. And by looking at the cost of borrows as well, that does validate that, because for instance, looking at cost of borrow average is 0.25%, meaning if someone wants to short SoFi, they're only paying 0.25% on a annual basis. So absolutely nothing. So in the grand scheme of things, on paper, things are very much easy for shorts to increase their position for SoFi. And I think that's a little bit more of the manipulation behind the scenes. But the fact that shorts are not doing that is a very positive thing. So let me know your thoughts on that. But like I said, I gave you an update on dark pool, secondary market. So this is where there's been a lot of abnormal transactions. And typically, there's not big transactions on the secondary market. Secondary market is what you and I both trade on, the retail market. And when it comes to it though, anything over 100,000 is listed here. So let alone 3.65 million in one single transaction definitely goes to show and makes you wonder, what does someone know? And over and above that, there was also another 3.65 million, 1.24 million, 3.65 million, and 19.1 million. So a lot of very, very big money is getting into the scene with SoFi, whether it be a big institution or whatever it might be. And what I mentioned at the very beginning, possibly, because obviously given Anthony's track record, he does absolutely love to take advantage of discounted prices, and he likes to do it in very much spurts. He could do one every quarter or whatever it is, but he likes to really just throw money at it very fast, and he knows when there's a big value. And so potentially some of these transactions might be in fact Anthony. Would be absolutely amazing if this 19.1 million was Anthony behind the scenes. Of course, let me know your thoughts on all of that, or potentially who these transactions might be for. Of course, like I already mentioned in a previous video, it could just be very much value rally or value investors getting into SoFi, because we are at a very substantial discount based on even the book value and everything. We are below our intrinsic value. So I think fundamentally SoFi is a screaming buying opportunity, and you can even tell that based on the actual technicals as well. So on the actual technicals, we did fail to get over into the higher percentile of the Bollinger Band, unfortunately, but I think this is just, like I said, the broader market, and with the broader market, the resistance levels just held very well. And looking at momentum number, retail investors are very much up today. So that's a very positive thing. And not necessarily just today, but over the last little bit, largely piggybacking off of this. So like I said, when a CEO does buy into his own company, people absolutely love that. So as you can tell, that does mirror that exact same thing. Stochastic, there is that deviation, black line above the red, showing a nice bullish sentiment is wanting to kind of fully develop from that. Just unfortunately, like I said, the broader market and the feeders around that are very much restricting it. But I think right now, given the circumstances, SoFi is doing everything right for them to flourish in a higher interest rate environment. So most likely I do anticipate our Q4 and then also Q1 earnings to be once again home run earnings. Just whether the stock price goes down continued based on that, because we've had amazing Q1, Q2, and Q3 earnings. Just fundamentally on the stock price, we have just gone down, and it really does suck. But in the grand scheme of things, this is why I've always said SoFi is a long-term investment. So make sure you guys do your own due diligence, because I am not a financial advisor. But with all that, don't forget to hit that thumbs up and subscribe. Always greatly appreciated. If you do like my channel and support the growth, take a look at my memberships. Link in the description below, or just hit the join button at the bottom of the screen. With that said, appreciate you guys watching. Let's all make a lot of money on SoFi.